when we talk about rent growth in the US, the normal situation for rent is that it grows right around or probably slightly higher than the pace of inflation. That is what you expect during normal years. And during the 2010s, it was actually a little higher than the historical average. It was averaging between 3 and 5% for most markets. This was higher than inflation was during those years. But during the pandemic, as we all know, this changed and rent growth just skyrocketed. It went up to more than 15% year over year, which I have never seen before in any of the data that I've looked at. And this happened for a few reasons, but short supply, big shifts in migration patterns, a lot of people were moving, strong household formation and demographic trends, along with just generalized inflation, were some of the primary drivers of why rent went up. As the economy remains stuck in this sort of uncertain holding period where we're not quite sure what is going on, there's a lot of confusing data, but things in the rental market are definitely starting to shift. Now, for the first time since March of 2020, the median asking rent in the US fell 0.6%, so not a ton, but it did fall 0.6% year over year to just under $2,000. In May, the median asking rent across the country was $1,995. So when you compare this to last year, the asking rent actually fell, at least on a national basis. Now, I'm saying asking rent, and I just want to clarify what that is. The data that we're looking at is basically what landlords and property managers post their properties on for listing sites like Zillow or apartments.com for rent. So that means two things that you should know. This is just for new leases. It doesn't mean like people who are at existing leases that their rents went down. That did not happen. In fact, I'll talk about that in just a second. But this is just for people who are signing new leases, and we only know what the landlord and property manager are asking for. We don't actually know what they finally agree on. Maybe there's some negotiation. This is just what's posted. But generally speaking, asking rents are a really good lead indicator of what is going on with rents as a whole, and that's why we're looking at this data set. But when you look at other data sets, it suggests that rent just generally is slowing down, even for existing leases. So there was an article recently in the Wall Street Journal where they combined a bunch of different sources. It was 6 different rent sources, and they found that the typical renter living in a professionally managed apartment building paid 6.5% more this year than last year to renew their lease. So that's really high. A 6.5% renewal rate is still really high, but it was at 11% previously. So this is just another data point that shows that rent growth is really slowing down, both in terms of existing rents and lease renewals. There are, of course, large regional differences in asking rent. When you look at the regional differences, you're probably going to notice a pretty similar trend here because rents are basically following the same patterns that you're seeing in other regions. So basically, the West is being hit the hardest, and asking rents have fallen 2.1% in the West. And that is followed by the South, which is 0.8%. So it's still up in the South, but it's barely up. When you look at the Northeast and the Midwest, they are both up more than average, about 5% for both of them. And particularly the Midwest, I think, is really interesting because it hasn't really slowed down. It's been very consistently at about 5% for the last year or so, and it's showing no signs that that is going to change. So as you can see here, big regional differences that are really mimicking the correction that we're seeing in the housing market. Now, let's talk about why this is happening. Why are rents starting to fall right now? One of the major reasons for rent declines is a glut of supply hitting the market. Remember, there was a pretty big lack of supply in places during the pandemic. A lot of people were moving to new cities, and maybe that city didn't have enough apartments or infrastructure to handle all those people. So there was less supply that drives prices up. But the other thing that's going on right now is that there's a huge boom in multifamily construction. A lot of builders saw this need for new supply. They know that the US is generally considered to have a housing shortage, and so they started building multifamily apartments. But that takes years, obviously, to build. So even if they started building in 2020 or 2021, a lot of those apartments aren't coming online, aren't hitting the market until right now. So if you look at this chart right now, you can see completions, which is the blue line. That's how many new apartments are coming online. And they are up 24% year over year. And they've been on a very steady increase really since about 2010. and they have peaked right now during Q2 of 2023, and they're apparently going to stay elevated over the next couple of months. But what's interesting on this chart that I think you should also pay attention to is the orange line, which is permits. That's basically how many builders are applying to build new apartments, and that is down 23% year over year. So I think builders are seeing the writing on the wall that there's an excess of supply coming to hit the market, at least in the short term, and they're scaling back on their building. Now, we're not back to 2011, 2013 levels, but they're coming down to more historical averages, and that will hopefully help the rental market find its footing over the next couple of years. Why is rent coming down? Well, rents, first and foremost, have cooled because the number of rentals hitting the market has grown. This means that there's more competition among landlords to compete for tenants, and so they're not able to raise rents as much because they have to compete on price. Another reason why rental supply has been growing and pushing down rents actually has nothing to do with construction. It's actually because many homeowners are opting to rent their homes out instead of selling. Probably all at this point heard about the lock-in effect. Basically, people don't want to move, they don't want to sell because they have really low interest rates locked in. Well, this is another symptom of it. Not only are people not buying and selling and there's sort of the stalemate in the market, but a lot of people who have property with equity in it and they have a low interest rate, they're going to rent it out. They don't need to sell it and maybe they can earn some cash flow. And so we're seeing increased supply in the rental market because of this as well. Finally, the last reason why rents are starting to slow down is because of general economic uncertainty. This is logical, right? It's pretty common sense that during a time where people are fearing a recession, inflation is eating into people's spending power, they are less likely to form a new household, they are probably less likely to migrate to a new city, and they probably don't want to spend as much on housing as they may have been comfortable with a year or two ago, and that is also pushing down rent prices. But what does this all mean for investors, for renters alike? Well, first, for investors with existing properties, I wouldn't personally be too concerned about your current rents falling. Asking rents are coming down, but they're a little more volatile than existing leases. Right now, there's no evidence that current rents are going to decline. And in fact, as we talked about, according to the Wall Street Journal, lease renewals are still increasing by 6.5% per year, which is still really high. The second takeaway is that rent just grew incredibly fast. So I'm not really all that surprised, honestly, to see asking rents come down. We don't even know if landlords are getting these rents, first of all, but clearly property managers can't stretch and, be as optimistic as they were over the last couple of years because there's an increase in supply and people are just tired of it and they'd rather stay put or not form a household in order to avoid these massive rent increases. And personally, I wouldn't be surprised to see asking rents fall a bit further given where we are with the economic situation, but I don't think they're going to enter a free fall. Rents tend to be relatively sticky even during a downturn. When you look at historical recessions and downturns, rent can fall. It did a bit during the Great Financial Recession, but not even close to the level that they did for housing. I think we'll probably see a situation similar where rents are going to come down a little bit, but they're probably not going to fall a lot. The third takeaway is that if you're looking to make a new investment, I would not count on rent growth in the coming years. I think we've had what we call sort of a pull forward, which is basically, like I said, normally rents go 3 to 5% a year, but we've sort of pulled all that growth into the last couple of years, and that probably means there's going to be a little bit of a hangover for the next few years where rent can't grow at the rate that it normally does, where affordability sort of has to come back down to earth and enter a realm where people can afford rent again. So when I am underwriting deals right now, I would not count on rent growth for at least a year or two, maybe even more, just to be conservative if you want to be conservative. Personally, that's the approach I have, because if I find a deal that works where rent doesn't grow and it still makes financial sense, that's great, because if I'm wrong and rent actually does go up, that's just a bonus and it works out. And I think during this market, during this correction, this economic uncertainty, it makes a lot of sense for you to underwrite your deals conservatively. So that's my best advice. All right, guys, that's all I got for you today. Thank you so much for watching. Again, my name is Dave Meyer. If you want to have any questions about this video or you want to connect with me, you can always do that on Instagram, where I'm at The Data Deli. I'll see you all next week.